In this video, I'm going to show you how to produce the most profitable trading system ever. I'm going to share with you some concepts and some ideas that you can take away immediately after this video and apply to your trading to ensure that you enhance your edge as a trader beyond what you thought was possible. I'm going to share with you my very own approach to dynamically adjusting my entries, my stop loss, my target, so that I squeeze as much profit out of every single trade and boost my performance year on year on year. So the first part of this video is going to be me breaking down and giving you ideas on one particular setup, and the rest of the video is going to be a masterclass on how you can really refine your entries and look for the best trades possible. This is going to be a video you're going to watch over and over again, so please save it now and make sure that you've got a way of bringing this video up. Save it to your favorite, save it to watch later, save it to a playlist. It really is going to be a masterclass, so sit back, relax, and do me a favor. If you're getting value from this video at any point along the way, please hit the thumbs up button, because it will help us get this information to more people so that they don't get scammed by all those fake gurus out there. All right, enjoy.
So let's all take a look at this then. So let's first of all go out to the weekly, if that's what you're using as the higher time frame. Look at this. First thing I like to see is the move in play, right? Got a big bullish move here. What I am already considering as I look left is a couple of things. One is this ascending channel, right? Two, following the flagpole. Two, these previous rejection candles, which makes me think, well, it would be wise to see how this week finishes, right? So again, all counter moves. Second thing I'd look at is where we are on the grand scheme of things, looking left at structure and seeing this major structure resistance level up here, okay, with these big choppy indecisive weeks here took place back in 2016. We haven't even been at this price since 2016. That's another great indicator, right? What else? We've got divergence from this ascending channel, equal measured move there, right? So let's go down now and take a look at some of the let's drill down and see if we can find what other confluence factors there are at this level. One thing I'm looking at as well is the fact that we're putting in these bullish runs. We know that doesn't go on forever. Okay, so we're likely to see some deceleration there. So we're approaching this zone. Let's go down to the 4-hour, start looking at the trading time frame. Okay, so first things first, we're now pushing into the zone. We have an equal measured move up here. If you use a extension, I think someone said that there's a 127, a 1618. So 1618 will be up around the completion point of that as well. So now what you can do, you can start to drill down and say, well, do you know what? This is the zone. This is what I mean when I say shallow window for entry. Okay, this is a shallow window, tight little window of entry where I could look for setups. And we're broadening it, going from a massive broad kill zone right down to a shallow window for entry. So now we're approaching this zone, and the confluence factors we've got is major structure on the weekly time frame. We've got that ascending channel on the weekly time frame. We've got rejection candles at the most recent level of structure resistance on the weekly time frame. Okay, we've got divergence on the ascending channel, right? Up here we also have, if we just draw on the horizontal line here, we've got 195 flat, which is a even handle. Let's just color that a different color because that's a terrible color, right? So it's a high CTS score, really high CTS score. So let's just draw that out, right? So look, if we was to combine technical scoring, right, we have higher time frame, or let's just say weekly, major, structure, right? We have weekly ascending channel, weekly RSI divergence on ascending channel. We have recent weekly rejection, first test since 2016. And the reason that's an important factor is because it's been so long. It's been 8 years. Because we're looking at the weekly time frame there, every trader in the world is looking at this price and having time to watch that price approach that major level of resistance, right? So everyone, or the majority of traders, will be thinking there is likely to be a rejection there, right? And the more people that get on board with that and the more time people have to see that, this is why I love swing trading, right? Obviously it's got pros and cons, but the more time everyone's got to prepare themselves for that, and analysts are reporting on it, and TV stations are, reporting on it, and traders are looking at it, and institutions are looking at it, and all of that, right? The more people start thinking the same way. So because it hasn't happened since 2016, if it just happened last week and the week before and the week before, it'd be a different story, right? So that's a nice one. That's like a tick, equal measured move. We have 1.618 extension. We have even handle number. Right, does everyone agree that this is a decent area to look for a short? So now the question is, okay, great. We've identified a very lucrative zone for a potential short. Right, that's great, and anyone can do that. And it doesn't mean that you're making money from it is the difficult bit. So how do we make money from it? Well, we have to decipher where we're going to get in and where we're going to get out. That's the most important thing. So let's just go back to the weekly and just take a look at where we might want to put some stops and where we might want to put some targets. So the first thing I'm going to do is just quickly draw out a line at this major high, right? So the high of this previous high, the highest high of the previous high in 2016 was at 195.83. Okay, and we never actually broke that 195 level ever. Yeah, or back in since 2008, right? So what I'm going to do is I'm going to put a horizontal line at that level, and I'm going to color that in red, which resembles our stop loss. I always use purple for entry, red for stop, green for target. And we now know where the highest high was back in 2016. Okay, and if you really wanted to go a little bit deeper, you could zoom in and you could even look at the ATR and all the rest of it. But I just want to know the exact high so that I can then base my new stop loss off of that high and use whatever strategy I want for my stop loss above that high. So we've now got the stop loss where the stop loss needs to go above. Target taking, I mean, this here, I don't like this too much, right? Oh, by the way, I always say pound yen is great for head and shoulders setups. This is a head and shoulders setup. I remember this one. I remember this playing out. But look at this, right? What happened here? See this indecisiveness? And we eventually rolled over. So it depends what you've got to stomach. You could either look at this level here for your target or target ones. So let's just color that in green. Remember, this is a counter move. So you're looking to get in and out. And then if you're really, really aggressive, you could just look to take target here. Or you split your position. So you just take target 1, target 2, right? Now let's color this dark green. Is this, oh, that's a bit, that looks black, doesn't it? There you go. Is this making sense to everyone so far? It's cool to do this kind of stuff. I think sometimes it's more valuable than just watching me go through my portfolio. So this is where we're at. We've now got great analysis on where we're likely to short. We've got pinpointed locations at where we need our targets and stops above or below. Now all we need to do is look for an entry technique. Now, what is your entry technique? That's going to be something that you've tested, some setup that you've built solid rules around that are very objective rules that remove all of this kind of subjectivity. So it's the final icing on the cake. It's like, this is where I'm getting in. This is where my stop's going. This is where my target's going. If this happens, then I do this. Now we need an entry technique. So I think Anne said this is a 3-bar reversal. So I think if on 4 hour, I would look for a 3-bar reversal. Right. So go down to the 4 hour, back to our trading time frame. So let's bring this over. We now know, we now know where our higher time frame stops need to go, etc. So Anne's looking for a 3-bar reversal. You could wait until we test this zone, this red zone, for a 3-bar reversal, or you could just, wait now. You're in it now. Like, you just wait for the next 3-bar reversal that forms, and away you go. Just going to move this slightly just so we can zoom in a little bit here. Big bullish run. 1, 2, 3, 4, 5, 6. Right? 6 bullish candles in a row. RSI starting to push overbought. So it's conventionally overbought already. 76. I just like it to go over 80. You could wait for it to push over 80 and then look for a 3-bar reversal. You could trade a high test wick, a doji, tweezer tops. You could wait for a double top on the 60. Right? So all of these entry techniques are now on the radar, and the fingers on the trigger, right? The crosshair is on the sight, on the target. And all we've got to do is just wait for those exact, whatever those exact rules of engagement into your setup are. So for me personally, a double top would be great. And I can use a 60-minute time frame. So this is something that we can follow along now. And maybe we're not going to be able to witness this play out because obviously today's the last live room. But we can follow this along and in the chat, in the platform, and just keep updating the chat. But a double top would be great. Double top would be great. And even if you're even more conservative with your targets and you're looking at this structure level, the worst case scenario is this. You're going to enter somewhere in this zone, let's just say right in the middle. Your stop loss will either go above a double top, which might be about here, and then let's just say conservative, you just want to get above this structure resistance. That's still a 3-to-1 setup. If you use the higher time frame and you get your stops way out of the way of that 2016 move, right, and you're looking at that more higher time frame level for targets, still a 2.7-to-1. So you want to bear that in mind as well, because is it worth playing the bigger run if it's still 2.7% on your account? Make sense? If you calculate your position size based on a percentage of your account, like 1% per trade, etc., if this is 1% risk, then this is 2.7% profit. So is it worth being in the bigger trade when you could just get a double top get a tighter stop and a smaller trade, but still get the same 2.7, 3 to 1 or whatever, and be in and out of the trade quicker. 2.7 to 1. Look at that. That's based on like an ATR above a double top on the 60, and then targets at this inside structure level here. Same risk reward ratio. So it's worth bearing that in mind, because you can still get the same amount of profit from this trade if you was trading this as opposed to the bigger profit target. That's the beauty of trading. You can build a system to suit you and still get the same profit. So this is another structure-based setup, right? Immediately, to me, this isn't as attractive as the pound yen. So we've got our structure, right? We've got an even handle number. I can already see we've got the 94 flat, right at the top of that level, which was respected previously. Had that lovely double top there as well. And what was interesting about this previous double top is we had a big rejection to the downside on the retracement as well, right? So the bulls really tried to own this. That's what that story tells me. The bulls really, really wanted to push that up. Okay, but the bears weren't having it. And that just tells a story in itself. So as we approach this level again, the same bulls and bears are in the market. Okay, and by the way, this is back in 2014 to early 2015. So we're now at that level again. Previous major structure, previous minor structure. You've got this bull run, which is likely to start decelerating. And if we decelerate into this zone, great. And then it's the entry technique, which could be an ascending channel, or it could be a double top, or it could be a, I really wouldn't go for a 3-bar reversal on this. So that's an example of where you would use more aggressive entry techniques for more highly probable setups. So the pound yen, you could just use, let's just say, for example, the pound yen had this so much confluence that it allows you to just literally place a limit order in here. Okay, whereas the New Zealand yen, it doesn't have that many confluence factors, so you might have to wait for a double top. And depending on how many points you get in your CTS system determines what entry you can use. So a great thing to do is have that in your, right? So this is the CTS entry criteria, right? And if you say, if the score is 8+, right, you can use, let's just say 9+ limit order, right? If it's above 8, you can use a next bar market following a doji or high test candle, right? If it's between 5 and 7, right, you can use a 3-bar reversal. If it's between 4 and 5, you can use a double top, right? If it's between 3 and 4, you can use a 2618, right? And if it is below 3, stay out. Make sense? So now we've got CTS target. Ooh. So you have the same thing. If it's a 9+, right? You get where I'm going with this, right? If it's a 9+, you can start basically tightening up your stop as well. So we can do this for stop loss as well, right? So target management, if it's a 9+, what I would do first of all is I would say previous structure, higher time frame. And what I mean by that is previous structure is the most recent. If you're short, it would be the most recent support level looking left. Okay, not inside resistance or anything like that. Next previous support level looking left. So that would be so that's most recent, right? And that would be higher time frame. If it's 8+, or let's just say 7+, you can look at previous inside structure, higher time frame. Okay, just make sure I'm spelling this right. Side structure, higher time frame. If it is 5+, you could look at previous structure, previous minor structure, trading time frame. If it's 4+ or 3+, you look at previous structure, previous minor inside structure, trading time frame. See where I'm going? And then I would put a note to say structure always wins. So you could have a 382 retracement, things like that, right? Some of you might even do CTS analysis on your target taking. And I would also say structure always wins. And I would say no less than a 1-to-1 RR. Make sense? You could also say, you could take this a step further, and you could say, this is like a masterclass now. 9+ equals 1% risk. Or you could say 7 to 9+, or 7 to 10, if you can score 10, equals 1% risk. Right. 3 to 7 equals 0.75% risk. Right. And then 0.5, below 3 or below, you're staying out below 3 anyway, sorry. So you can do something like that. Or you can even split it where you say 5 to 7 is 0.75, and then 3 to 5 is 0.5% risk. Right. So far we have our CTS entry criteria, we have our CTS target management, and now we can take this even further and say CTS stop placement. Okay. And again, you could do 9+, right? 2 pips, 1 pip, 2 pips above trading time frame high, previous high, right? You could do 7 or 6 to 8, and you could go ATR above trading time frame high. And then you could do 3 to 6 ATR above higher time frame high. See that? So basically, the higher probability to set up, the tighter you stop. How cool is that? And this is happening dynamically across every single one of your setups. So you're squeezing as much profit out of each trade, minimizing your risk, maximizing your reward, getting as many opportunities as possible and staying out of as many as possible, depending on every situation. So every trade, you are like using ultimate power on every single trade. Now, is there anything else that you think you could add to this? Do you think I'm finished? No. Because there's something else. There's something else. Anyone know what it is? Second targets. Yeah, so look, basically trade management. Okay, let's call it CTS trade management. And the trade management is how aggressive you are managing the trade. So 9+, right? You could just, like, you could have some trailing technique in there. Or you could split positions. Now, if it's a 9+, you could either take, like, the two options for a 9+ is take your whole, like, trade one position and be more aggressive with targets. Because look, if you've got a 9+ trade and your target's like this, right? Instead of splitting that, you might as well just take the whole position off there, right? The maximum position for the target. So you could do that. Or you could just be more aggressive with, you could not set a target and you could just trail literally like behind every outside return. What I would suggest is you trail on the lower probabilities, not low probabilities, but lower probabilities. So 9+ is like full position, right? 6 to 8 is split position at structure, and again that's trading time frame, or right, and then you go 5. If it's a 5, split position at higher time frame structure, and then between 3 and 4, it's a trail on lower time frame, right? And then below 3, stay out. How cool is that? You've basically got a trade plan there now for to start working off, to start building off of. How cool is that? And that in itself is an amazing lesson for something I've never really taken the time to get out of my own personal trading in my own head and kind of jot down in a way that people understand it and can start building from it.
All right, that's it. If you got value from that, please, as I say, hit the like button because it will help us get this out to more people. And until next time, guys, let me know in the comments how your trading's going. I'm always interested in that, and I'll see you next time.